Indonesia Investment Authority, INA. On your view, will it work similarly with the other peers managing their sovereign wealth fund? How do you see Indonesia Investment Authority?
Well, it depends on what the mandate is. I mean, the different sovereign wealth funds have different mandates. I think often what we see is sovereign wealth funds try to provide capital for human and intellectual capital, as well as financial capital for their own domestic economies. And we've seen that work pretty well, both in Singapore and elsewhere. So it's, I think, a way to try and build that capital up slowly over time. And other countries are doing it. It's proven quite successful. I think it's certainly an option that Indonesia should have explored.
Following where the money goes, and not only hot monies, on S&P Global Ratings, how do you see the recent global investors' attitude amidst this pandemic?
Well, what we're seeing clearly is that real interest rates everywhere have taken another leg down, and they're going to stay exceptionally low for a very long time. So we might see some pickup in bond yields because of the fiscal stimulus in the US, but ultimately we still think that in most of the major economies of the world, unemployment rates are going to remain very high. That's going to keep inflation low, and that's ultimately going to keep interest rates low. So investors are looking around for yield, and they're looking for return. And when you come to Indonesia, clearly you have an economy that in normal times is growing at 5%. It could grow by more than 5% with the right structural reforms. But you have a bond yield that's well above the regional average. And so it is still, I think, a destination that many global investors are going to be looking at in a world where interest rates stay low.
On your 2020 review, Shaun, to what extent did you see our interest rate level benefiting us in terms of attracting the global investors' appetite toward Indonesia?
So it certainly, we saw capital inflows coming into to Asia Pacific and Indonesia through the tail end of 2020 and into early part of this year. So clearly the real interest rate differential is helping. Certainly as people start to really understand that interest rates in the rest of the world are going to stay low for a very long time. But at the same time, if you want that stable, sticky capital, the capital that doesn't flow back and forward because of changes in exchange rates every other day, I think what you really need to do is convince people that, first of all, the macroeconomic policy framework is reliable and predictable. And I think we're starting to see that across Southeast Asia. We're definitely starting to see it in Indonesia, where policy transparency is improving all the time. And secondly, I think people need to see growth. Economic growth at the end of the day is what people are trying to buy into. And Indonesia, with a 5% growth rate in normal times, is going to be well above what we'll see in many other emerging economies around the world. So if the quicker Indonesia gets back to that 5% growth rate and even maybe tries to raise it higher with structural reform, I think that sticky capital certainly has a good chance of coming to Indonesia.